Welcome to ForexTV.com. Today is Monday, December 22nd. I'm Kathleen Reddington with your New York Forex Market Buzz. The U.S. dollar gains on the Japanese yen. And now for a look at the latest headlines from the CEP News Desk. The Chicago Fed National Activity Index slipped further in November, coming in at negative 2.47 from a previous reading of negative 1.27. All four categories contributed negative results to the November index. Consumer confidence among Canadians continued to tumble in December, falling to its lowest level since the recession of the early 1980s. Eurozone industrial new orders fell further than expected in October, with Eurostat reporting a 4.7% month-over-month contraction compared to expectations for a 4% decline. And Japan posted a trade deficit of 223.4 billion yen in November. This was despite expectations for a 217.3 billion yen deficit. In October, Japan posted a downwardly revised 67.7 billion yen deficit. The original figure was recorded at 63.9 billion yen deficit. And today we are joined by Stephen Leahy of Backbay FX. Hi, Stephen. How are you today?
Doing very well, Kathleen. Thanks so much for having me on.
All right, and we saw a huge plunge in the Japanese trade deficit, as I just mentioned, and showing the widening. It shows the widening recession there. They've been seeing a recession there pretty much the entire time, but this kind of really brings it to the forefront. But I mean, we've only seen the yen gaining. Now, this morning we've finally seen a drop in yen. Do you think we're going to finally see yen slow down overall?
You know, Kathleen, I actually do not as of yet. I think obviously all trends must come to an end, and certainly we're in a trend where the Japanese yen is strengthening, but I don't think we're there quite yet. Presently trading at this just above the 90.15 level on dollar yen. And one of the things that we've been discussing here is we always are interested in seeing the capitulation trade, and we saw at the end of last week dollar yen got down to about the 87.20 level. We're actually fairly confident in. Let me state that I think one of the reasons that dollar yen has moved back up higher, dollar strength and Japanese yen weakness, is that there has been some verbal intervention, at least if not actual intervention, by the Bank of Japan. However, we do think the lower dollar yen is going to continue, especially with the extra thin liquidity coming up around this holiday week and next week. And so it wouldn't surprise us at all to see dollar yen move lower and even take out the very significant level of 85.00.
All right, and last week people were excited to see dollar yen at 92. That you just said it got down to 87. You're saying you might see it at 85. But there is speculation now we'll see the dollar yen at 102. Are you going to trade this dollar yen pair at all, especially with the thin liquidity, or are you just going to leave it alone?
No, we're going to go after it. The thin liquidity, while it makes it tough to get into some positions occasionally, and while occasionally that same thin liquidity will tend to stop you out of your trades, the thin liquidity also means that moves are exaggerated in the market. And, the type of client flow that comes across from the big bank desks that would normally be easily absorbed by the market and not move the market very much, that same order is going to move the market significantly. Moving the market significantly is going to trigger, more stops, more take-profit orders, and, that's what thin liquidity means to us. And so we will keep trying to trade this. We are fairly nimble about things, and we're going to try to catch it with really short, tight stop losses on here, but we will actively trade this through the end of the year. While others rest, I think it's an opportunity for us.
Now, about a different pair, how about your sterling yen strategy?
Kathleen, sterling yen, you and I speak about this regularly, and anyone who's heard me speak, I'll continue to say that at this point in time, it looks like it's going lower. I don't see any reason that the trend is going to stop. I believe sterling yen is a great proxy for kind of the global risk appetite of what's going on out there in the world. And as we see equities move lower, we see sterling yen move lower. Maybe it's a cause and effect. Maybe it's effect and cause. Maybe sterling yen moves first, then equities. But the truth of the matter is we seem to be heading down. I sent over a chart. There seems to be this kind of bottom path that right now shows a bottom right about the 132 level on sterling yen, which we touched earlier today once or twice. It's bounced back a little bit, but it certainly seems to me to be in this channel that is moving lower and lower. And so at this point, we'll keep on our very long-term, low-leverage sterling yen trade, and we will actively, in the short term, look to sell sterling yen on strength and buy it back when it breaks new lows.
All right, Stephen, and as we enter this shortened holiday week and we're coming up on the new year, I want to know what your expectations or any predictions you have for the start of the new year.
Sure. I do think, as you mentioned, the thin liquidity, I think that's going to continue. it's not a holiday and a lack of market makers out there that is causing this thin liquidity. It's the fact that a number of the big market makers, AIG and Lehman Brothers, for instance, are no longer there. And they really were two of the big brokers of last resort for the big banks and hedge funds looking to move big positions around. And so the thin liquidity, the desks that remain, they still even have smaller size and position limits. And so I think this extraordinary intraday movement is going to continue. We've seen euro-dollar move multiple times, 500 total points in the course of a day. Might end up right back to where it started, but 500 points in a day, that's a heck of a lot of trading opportunity. We don't see that thin liquidity slowing down anytime soon, we think, certainly through the spring. And the only other thing that we are really looking at, so we will actively trade on a real short-term kind of nimble trading basis. And the only other pair that we're really interested in and we're following closely, we mentioned last week and a half ago when you and I spoke, we sold dollar Canada based off kind of a basic chart of a triple top. It tried 1.30 a couple times and failed. We think dollar Canada is moving lower on the strength of oil moving higher in the coming weeks. And so those are trades that we're looking at and we're actively taking a swing at.
All right, Stephen, thank you so much for joining us today.
You're very welcome, and thank you, as always, for having me on.
This has been your New York Forex Market Buzz with Stephen Leahy of Backbay FX. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.